Hello. So, since naputol kanina class yung discussion, okay? So, dito naman tayo sa sa direct labor variance. Parang iba pala yung nag-share. Dito naman tayo sa direct labor variance. So, no? So, same yung figures class, no? Yung kinompute natin, yung materials. So, same yung lumabas class. Dito sa PowerPoint yan. Ay, bakit ganun? Bakit nakuha pati yun? So this is a materials price variance. Okay. Okay, so materials price variance, as you can see here, no? This is the actual price, okay, less the standard price multiplied by the actual quantity of materials used. So we have the materials price variance. So yan din yung diniscuss natin a while ago. So yan, 702 unfavorable. Okay, standard price at standard quantity. So 700 ang kung iano natin yung percent of the standard price at standard quantity. So 702. Okay. And then 4,680 sa nanggaling. Dito yan, no? Actual quantity at standard price yung 4,680. Okay? So 15%. Okay? So materials usage variance, this is also called as yung quantity variance. Okay? So actual quantity less standard quantity and then multiplied by the standard price. Okay, the standard price per unit. Okay. So that's it. So percentage 558 over yung 5238 sa nanggaling yan kung babalikan natin kanina, no? So the standard quantity multiplied by the standard price, ito yung 5238 na nandito. Okay? So, ganun lang. Ganun class na mag-compute. So, responsibility for the materials price variance. Okay. This belongs to the purchasing agent. Price can be influenced by quality, quantity discounts, distance of the source from the plant. And then, responsibility for the materials usage variance. This belongs to the production manager. Okay. Kasi, syempre sa quantity na to, sa production na mismo to. So, variance can be influenced by minimizing scrap or waste or rework. Analysis of the variances. Okay. The first step is decide whether the variance is significant. Second step, find out why it occurred. Nag-show ba? Sana naman nag-show na. Okay, so accounting and the disposition of materials variances. Materials variances are added to cost of goods sold if they are unfavorable. Materials variances are subtracted from cost of goods sold if favorable. So, tingnan yung effect class, no? If the variance is unfavorable, it will increase the cost of goods sold. Okay? So, ibig sabihin, no? So, more cost and the ultimate effect of that, no, is a less profit for the organization or for the firm. Okay? Whereas, no, if it's favorable, on the other hand, material variances are subtracted from the cost of goods sold. So it has a positive effect on the profit pag favorable. Okay. So, dito naman tayo sa variance, sa labor ba to? Okay, dito tayo sa labor. Okay? So, balikan natin yung PowerPoint, yung Excel class, no? Doon ko siya gusto ipakita sa inyo, yung labor. Okay, so we're back here. Okay. So pagdating sa labor, okay, and use yung hours. Diba? Hours yan or yung sa efficient sa usage, and then yung rate, which is almost the same sa price. No, so okay, so ganun lang ulit. Okay. as formula as formula lang. So, actual or actual rate, hanapin na natin, no? Ano yung actual R? Actual R's involved in the production is, paano ba yung nagamit dito? Kunin ko nga pala yung data dito sa sa PowerPoint. Pakita ko sa inyo. Kunin ko yung data dito sa PowerPoint kasi may sinabi dito eh. Ito na pala. Yan na. 360 hours yung actual cost of inspection labor. Okay, so we have here 360, right? So 360. And then actual rate 7.35 coming from here, no? 7.35. Okay, you can already compute this one. Yung standard, yung actual cost 2646, so sing lang dito. And then actual R ulit 360 times standard rate na ngayon. So tingnan natin, okay? How much is the standard, ano ba yung standard rate natin pagdating sa inspector? 7 din, no? Say, ay, 7.35 pala to. So, $7. Okay? So, $7, you multiply this one times yan. So, okay? So, okay, so now we can now compute, no? For the rate variance of the direct labor. Okay, so deduct lang natin to. And actual less the standard. So the actual is greater by 126. Therefore, okay, ibig sabihin, mas mataas yung cost natin. So this is unfavorable. Saan na yun? Unfavorable and favorable rate variance. Okay. And then, dito naman tayo, may given na tayo, 520 dito. So, i-compute na lang natin yung standard hours and then standard rate. So, ano ba yung standard hours natin? Okay, tingnan natin dito yung standard hours. Okay, so standard cost sheet. Okay. Dito, okay, ang usage natin, 0.7. O, ilan ba yung production natin per meron tayong 48,500. So we multiply this one, no? 0.007 times 48,500. Okay? So we have, okay, the standard hours is 339.5. Okay? Multiply, and then yung standard rate pala natin, okay, which is given yung 7. Okay? So we can now compute here, no? Just multiply. Okay, so ganun. So, and then, okay, now we can deduct. Okay, we have 143.5. Okay, mas mataas yung actual kaysa sa standard. Therefore, this is unfavorable still. Okay, so unfavorable. Okay, ano na to? Efficiency variance. Okay. Because, ibig sabihin, we had the standard hours na ito lang yung in producing this per unit no product, ito lang yung ito lang yung standard natin for this production of for 88,500. Pero yun pala, mas madami pa yung magagamit natin na oras. Okay? So, kaya yan. So, and yung total variance dito, ito pala hindi natin na-compute ng variance nito, no? Itong materials price variance, no? Yung total. Tingnan na natin muna dito. So, pag dito sa materials price variance, so magkano? Ito muna tayo sa labor. Tapusin natin. So, magkano yung total? Kasi pareha silang unfavorable. So malamang unfavorable din to. Okay? So 269.5, okay? 269.5 unfavorable, favorable labor variance. Dito naman tayo sa dito sa materials price variance, we have pag sinam natin to, i-ano natin to, actually, ayan. So dito, this kasi ito, so mas mataas yung unfavorable pa rin to. Unfavorable, favorable materials price. Thank you. Sige mamaya. Materials price variance. Materials variance lang. Materials variance. Okay. So, ayan class. So, balik na tayo dun sa sa PowerPoint natin. So, ganun lang. Pag ganun kaganda ka at ease yung as formula. Alam. May titignan lang ako. Compare lang natin dito yung okay, so 144, same din yung answer sa answer natin. So ilagay natin dito yung ginawa ko dito, yung ginawa natin dito sa Excel. Okay, so ayan. Ganyan. So so labor rate variance, okay. Actual rate less standard rate times actual R. Ganun. So, yan, same method, no? And then, labor efficiency variance, okay, actual R less standard R was standard rate. So, causes of labor rate variance, labor rates are determined by external forces as labor markets and union contracts. So labor rates can vary when more skilled and more highly paid laborers are used for less skilled tasks. So unexpected overtime occurs. So responsibility for the labor efficiency variance, production managers are responsible for the use of labor hour, but once the cause is discovered, responsibility may be assigned elsewhere. So additional cost management practices, Kaizen costing. Kaizen costing focuses on the continuous reduction of the manufacturing cost of existing products and processes. Kaizen is a Japanese word meaning continuous improvement. So dito atok na as parang lumalabas ito sa mga theories, no? I remember this Kaizen costing sa board exam. No? So lumabas ito during my time, no? The philosophy in a Kaizen costing system is that the budgeted expectation or Kaizen standard of the current period should exceed the improvement accomplished by the previous period. Okay? Using this philosophy, each period's Kaizen standard is set based on prior period's improvements, thereby locking in these improvements to push or even for even greater improvements in the future. So continuous improvement, that's the key word for Kaizen costing. We also have a target costing here. Focuses on the reduction of the design cost of existing and future products and processes. Increasingly, companies such as Toyota, Boeing, and Olympus are emphasizing cost management in the design stage as they begin to recognize that an astonishingly large percentage of a product's total costs are locked in or committed by the time it finishes the design stage and moves into a manufacturing stage. Target cost is the difference between the sales price needed to capture a predetermined market share and the desired per unit profit. So we have here the formula for target cost. So expected sales price per unit less desired profit per unit. So syempre ito lang yung natin okay. Target costing. So I mean, ito na yung parang may predetermined or na cost na tayo, no? So ito yung gusto nating cost, yun. Kaya target cost per unit. Okay? As you might have noticed, target costing is more than just cost control because it includes expected sales revenue and desired profit margins in the calculation of the target cost. For this reason, target costing often is referred to as a profit planning technique. Okay? In addition, target costing is more of a long-term approach to cost reduction Whereas Kaizen costing is a more of continuous short-term approach to cost reduction. So yun yung difference nila. Mas target costing at long-term, and then Kaizen is more of a short-term. Right? Now let's go to variable overhead variances. Okay, so um sa overhead na tayo, no? So balik tayo class dun sa sa ating Excel. Okay? Mas maganda kasi dun eh. Gusto kong ginagawang Blackboard yun. And I'm just gonna screenshot the data for the variable overhead variances. Okay, so meron na tayo dito. Ito tayo sa Okay. Ito tayo, next page. Variable overhead variances. Okay? So for the variable overhead, kunin ko din yung standard cost sheet natin. Dito for variable, wala yung isang standard cost sheet. Wala. Hindi ko ba na-save yun? Anyway, balikan natin yung isang standard cost sheet. Why, oh why, Delilah? Wait lang Wait a minute, kaping mainit. Okay, so now we have here the standard cost sheet. Okay, variable and then variable overhead variances. So anon pa din, no? One usage or quantity, okay? Or hours na to, hours and then rate, okay? And then ito na naman si formula, okay? Variable overhead variances, okay? So variable overhead standard 3.85, actual overhead cost 1.6, actual hours work 400. No, kung tingnan natin dito, meron kang actual hours dito na work, okay? And then makikita na naman natin yung actual rate dito eh. Ang given dito is actual variable overhead cost. So given yung 1.6, right? So kung compute natin yung yung rate plus, so i-divide lang natin to. 1.6 divided by 400. So $4 ang actual rate natin. Okay? Now let's go to the next one. So 400 halang class. 400. And then how much is the standard rate ng variable overhead? 3.85. Okay, ganon. So, ilatak mo lang. Okay, 400 times 3.85. Okay, so now you can compute, no? For the rate variance. Okay, or spending variance. Tawag dito pag sa variable. Okay. Actual less actual standard. So we have here, okay, 60, mas mataas again yung actual as a standard. So unfavorable, okay? Unfavorable spending variance. Spending variance. Okay? So dito naman tayo. Okay. So we have here yung standard hours. How many yung ating standard hours? So saan natin makikita yan? So eto, we have here the applied overhead. Okay, so 1456. Actually, ito na yun eh. Kasi naka-costing na to, 1456 na to. Okay, cost na siya. Hindi na naka-divide. So 1456 na to class. Okay, so 1456. So Pero based dito, mako-compute mo ba yung ano, yung mako-compute mo ba yung actual hours ay yung standard hours dito? Mako-compute mo of course, no? So kung mo multiply 1456, no? 373. Ay, try nga natin class. Kung ang figure na lalabas 378 yung nakalagay dito. Hours allowed. Yung allowed na iba yung nakalagay. Hindi naman siya sinabi kasi class na yung 373 is yung standard. Pero allowed siya, no? Pero kasi meron tayong given applied na overhead. So ito na yung automatic na ilalagay natin dito. Okay? So dito we have here 1540 less 1456. Taas again yung actual, so unfavorable again. Okay? This is what we call as overhead efficiency variance. Okay? Now, so ganun lang. Okay? So, balikan natin yung PowerPoint. Okay? So, total variance. Yan. Hindi ko nalagay dito yung total variance. Pero, lagyan natin. Since both of them are unfavorable, so 144 unfavorable. Okay? Overhead variance, ilagay natin dito sa, lagay natin dito. Ayan. Now let's go to our fixed overhead variances. So in fixed overhead, tatlong line items na involved. Okay? We have here the applied fixed overhead, we have the budgeted fixed overhead, and then we have the actual, okay, fixed overhead. So actual, budgeted, and then the applied. So, here, no, the budgeted fixed overhead 749,970, practical activity 23,400, direct labor hours, standard fixed rate 32.05, hours allowed to produce 3 million bags of chips, 0.078 times 3 million is equals to 23,400. We have an actual production. Parang iba na yung data dito, class, no? Kaysa dun sa earlier, no? The 2,750,000 bags of chips, actual fixed overhead cost, 749. Standard hours allowed for production, 21,450. So let's compute, no? Dun, dun tayo magpunta sa sa Excel para masaya. Okay, so punta tayo sa Excel. So gawin ko screenshot ko lang ulit. Wait lang Wait lang guys. Screenshot lang natin ulit mga pre. Mga lods. So we have the given here. Okay, so diba pag fixed overhead, tayo din sa, bakit doon ko pinost? Ito yung sinasolve natin kanina, class. O dito na lang tayo sa sa ilalim. Okay, fixed overhead variance. Okay. So for the fixed overhead variance, sabi ko sa inyo, di ba? We have the actual. O ganun pa rin, lagyan na rin natin usage. Okay, and then rate. Okay, so actual or hours din. Oh, ay, actual. Di ba? Hindi. Dito kasi mali pala. So, dito, ang magiging applicable na dito class is actual, budgeted, and then applied. Okay? Applied. So, yan yung tatlong ano natin. Okay? So, actual, we have the actual cost, fixed overhead cost, we have 749,000 given. Okay. We have the budgeted fixed overhead given ulit 749,970. Okay. And then now ang problem na lang natin is yung applied, no? So okay, so paano natin i-compute yung applied class? So we have here, ano ba yung given dito? Meron tayong standard. Remember, parang ano lang din to eh. I-remember do sa formula natin kanina, yung mga nandito sa ilalim is standard. So, itong applied, no? So, standard hours times standard rate. So, we have here the standard fixed rate of 32.05. Ilagay natin dito sa dito. We have here 32.05. Paano ba yung standard hours allowed for actual production? 21,450, di ba? 21,450. So, i-multiply mo yan. Okay? So, we have 687,472.5. Okay? Okay, now you can compute the variance. Okay? So, this one, sa actual less budgeted. This is now what we call as the spending variance. Okay? And ito, yung difference naman ito, so kung pansin nyo, mas malaki yung budgeted kaysa sa actual. So this is actually favorable. Spending variance, favorable. Okay? So, yan ang F. Dito naman, okay, budgeted less applied. So 62, yan. Bakit ganito? Budgeted. Oy, magtama ba yung figure ko? Ito, 687,472. Yung 53. 7 ko. I-ano ko nga class. Wait lang. Okay. 62,000 pala to. 62,498. Okay? So, mas malaki yung budgeted kaysa sa applied. Therefore, this is unfavorable. And this is what we call now volume variance. Okay. Volume variance na unfavorable. Okay. So, okay. Volume variance unfavorable. Okay, so we'll just screenshot this one. Ilagay natin dun sa PowerPoint. Walang class ha. Okay. And then, okay, so this is it, no? So same na, 62,497 and 62,490. May minimal yung difference, no? Plus 97, favorable, unfavorable. Okay. So, yan, performance report. So, ito na yung nangyari sa ating mga, ito may ano din siya, meron ding actual cost, other items na, fixed overhead items, depreciation, hindi. Ito pala yung breakdown, sorry, no? Breakdown nung fixed overhead. Okay, so, yan merong, ito yung actual, yung budgeted. Okay, so that's why 970 favorable. Okay. So, ibig sabihin, mas maliit yung actual cost kaysa sa budgeted na cost. Okay? So, volume variance naman yun. So, 62,497. So now let's go to the last part, okay, which is the accounting for variances. Okay. So the actual price is 0.0069 per ounce of corn, and standard price is 0.006, and 780,000 ounces of corn are purchased. So the materials price variance, no, you can see here we debit materials inventory for 4,680, and then we have a materials variance of 702. Okay, it is being closed in accounts payable. So I mean, hindi pala siya closed dito. It is closed sa cost of goods sold, no, not accounts payable. Pero and you can see here, no, the total of materials inventory plus the price variance is the accounts payable. Okay, so during the period, 780,000 ounces of corn is placed into production. The standard quantity is 870,000 ounces, and standard price is 0.006. So we have here the materials usage variance or quantity variance. We record it, debit in work in process. Set. We are going to put that into production. Okay, so and then credit materials usage variance, and then materials inventory. So during the period, the firm has 360 actual inspection hours, while the standard hours, ito naman yung sa labor variances. Okay? We have here work in process kasi ipapasok natin siya sa production. Okay? And then debit labor efficiency variance, and then labor rate variance, and then accrued payroll. And then at the end of the year, okay, we close this to the cost of goods sold. Okay, so cost of goods sold is debited. Materials price variance, okay, labor efficiency variance, labor rate variance. Okay, so closing variances. Ito kasi yung sa ano to usage variance to na favorable. So kaya credit naman yung cost of goods sold, and then debit yung material usage variance. Okay, so I hope you learned something from this discussion class, and God bless in your future exams. Thank you for listening.